What's going on, guys? I want to do a little trade recap. I did call out Nvda 170 long scalp calls off the open. Now this turned into an absolute all-day runner, absolutely insane recovery from the sell-off on earnings yesterday. But I just want to show you guys here today off the bell, 6:30 a.m. Nvda 170 long scalp off the bell. The reason why I was looking at the 170s, if we can just look at the pre-market data here, the pre-market high was sitting at around 169.20. So what I was actually looking to do was get into those 170s. As soon as the bell kind of opened, we just really started to explode. Now this candle did start to go green very quickly, so a lot of you guys don't like to necessarily trade that first 5 minutes of the day. That's completely understandable. Here's another way that you could have taken this trade. So if you missed the 170 calls right off the bell, let this 5-minute candle close, right? Take the highs, put in a trend line here, tell yourself if this does break, right? If this does break the opening range highs, that first 5-minute candle, I'm going to go ahead and get long. Now it does break on the preceding 5-minute candle, proceeds to pull back for 10 minutes, but as we can see here, still holding the 5 and 10-day moving average, obviously well above the 20-day moving average here. Nice little pullback here, then starts to push higher, takes out those initial highs, runs all the way to the linear regression. This price here was sitting at around $174, so you can see from a price of 171 to 174 was a $3 move in your favor in a matter of 5, 10, 15, 20, 25, 30 minutes here. And it actually does continue to keep going. At one point in time, puts in highs of around $178 before finally pulling back, treading sideways, and losing the 20 SMA. Now, the easy, clear stop loss for a type of trade like this is going to be one of two things. Use the 10-day moving average. As soon as we close below it, you would stop out here, 176, or give yourself a little bit more space and use the 20-day moving average, and that price would have been 175.90. Either way, two different technical stop losses, you still would have made money on this trade regardless. If you missed the 170 break off the open, you could have taken the opening range highs. I want to give you one more quick little example here how you could have also played this as well. You could have let the opening hour candle close. You can see the first close over the 20 here. That price would have been 172.60. Use the first hour candle's close as your opening range high. Here's your opening range low. That second hour candle that opens up at 7 a.m. Pacific Standard Time, as soon as we take out this prior price action, you could have gotten long with an intention to sell at each supply zone higher. That first supply zone was at 174.90. So from a price of 172 to 174.90, you're looking at a $2.50 move, even if you would have sold at the first level of supply. Obviously, we did continue to ride higher. You could have held the runner and just rode that runner out the rest of the day. But just want to give you guys a couple of trade little ideas and recaps on how I play some of these stocks and some different ways that I kind of look at the overall market. Again, if you guys are interested in learning how to make money, trade stocks, make sure to join Discord, like, comment, and subscribe to my YouTube channel, and I will catch you guys all in the next video.